Hey everyone, welcome back to Corporate Decoder, the place where we dig into company filings to uncover the real story behind the numbers and legal jargon. Today, we're diving into a really interesting report from Diversified Holdings, or CODI as they're known by their ticker symbol. It seems like there is a bit of a complicated situation brewing involving a subsidiary and some potential bankruptcy proceedings. This could definitely shake things up. So let's see what is really going on. Now, before we get too deep into the weeds, if you enjoy these kinds of insights, please hit that subscribe button and the notification bell so you don't miss any future deep dives. Also, we have a fantastic Discord community linked in the description below where we discuss these filings further and share valuable insights. Let's jump right into this report. It talks about events happening on the 17th of November, 2025. A big piece of news here is that Lugano Holding Incorporated, which is a subsidiary of Compass Group Diversified Holdings, LLC, has filed for bankruptcy protection. This is a pretty significant event for any company, and it means Lugano and some of its related companies are now going through a legal process to reorganize their debts and operations. Now, Compass Diversified Holdings itself, which is often referred to as CODI, is involved in this situation. At the request of Lugano, and if the bankruptcy court approves, Colorado Die is going to provide what is called debtor in possession financing. Think of this as a loan to a company that is already in bankruptcy to help them keep operating during the restructuring process. The maximum amount for this loan is not to exceed $12 million. This also includes something called a roll-up of debt that Lugano already owed to CODI before filing for bankruptcy. This means some of the money CODI is lending could be used to repay existing debts they were owed. This formal report, a Form 8K, is essentially a way for public companies to report major events that shareholders should know about immediately. The date of this report is the 17th of November, 2025, and that is also the date of the earliest event reported, which is the Lugano bankruptcy filing. Now, looking at the company's structure and what is traded on the stock exchange, Compass Diversified Holdings has several classes of securities. There are the main shares representing beneficial interests, traded under the symbol CODI on the New York Stock Exchange. They also have preferred shares, Series A, B, and C, also trading on the New York Stock Exchange under symbols CODI PRA, Colorado DIPRB, and CODI PRC respectively. These preferred shares often have different dividend rights or other features compared to common stock. The company also includes a lot of forward-looking statements. These are essentially educated guesses or expectations about the future. They're talking about potential outcomes of investigations, whether lenders will provide more support, the future of Lugano in bankruptcy, and the timing of financial reports. They use a lot of cautionary language, warning that actual results could be very different. This is standard practice, but it definitely highlights that there are a lot of uncertainties ahead for CODI, especially with the Lugano situation and ongoing internal control reviews. The core of this filing really is about the Lugano bankruptcy as detailed in item 8.01. The company is clearly stating that Lugano, its subsidiary, has filed for Chapter 11 bankruptcy. Chapter 11, for those unfamiliar, is a part of the US bankruptcy code that allows a business to reorganize its debts and continue operating. Rather than liquidating entirely, CODI's role in providing this debtor in possession financing shows they are trying to manage the fallout and hopefully preserve some value. The report also mentions that a press release about this event is attached as an exhibit, which is where we'd typically find more of the public relations spin. This filing points to Exhibit 99.1, which is a press release dated the 17th of November 2025. While we don't have the full text of that press release here, it is the official announcement detailing the Lugano bankruptcy and the DIP loan. These press releases are usually carefully worded to manage public perception, so it's often helpful to compare them with the more formal disclosures in the 8K. Typically, these press releases might highlight the company's efforts to address the situation, express confidence in the reorganization process, and reassure investors. However, the underlying fact remains that a significant subsidiary has entered bankruptcy, which is never a positive sign for the parent company's overall health, even with the DIP financing. So, what does this all mean for Compass Diversified Holdings and its investors? On the surface, the bankruptcy of a subsidiary is a serious blow. It suggests that Lugano was facing financial difficulties that it couldn't overcome on its own. The fact that CODI is stepping in with $12 million in financing shows they are committed to trying to navigate this crisis, but it also means they are injecting more capital into a troubled situation. From a financial perspective, while this specific report doesn't contain detailed financial statements, the bankruptcy filing itself implies significant financial distress for Lugano. This could impact CODI's consolidated financial results, depending on the size and interconnectedness of Lugano with the rest of CODI's operations. The forward Looking statements heavily emphasize the uncertainty surrounding investigations into internal controls and potential restatements of past financials. This suggests that the Lugano situation might be part of a larger issue of financial reporting problems within CODI. The risks highlighted are substantial delays in financial reporting. The need to restate financial statements, losing compliance with stock exchange listing requirements, and ongoing litigation are all serious concerns. The company is essentially telling investors that things are uncertain and there are many potential negative outcomes. Looking at the company's direction, this situation clearly points to significant challenges. On one hand, CODI is directly addressing the Lugano bankruptcy and providing financing, which shows a proactive approach to managing the immediate crisis. However, the broader context of internal control failures and the need for investigations suggests deeper underlying issues within the company's financial reporting and governance. Notable risks include the possibility that the Lugano bankruptcy might uncover further problems, the cost of managing this bankruptcy process, and the potential for significant financial restatements that could negatively impact investor confidence. Opportunities might lie in how effectively CODI can manage this situation, reorganize Lugano, and rebuild investor trust through transparent and accurate financial reporting. My conclusion on this filing is that there is a cloud of uncertainty hanging over CODI. The Lugano bankruptcy is a significant event, and it comes at a time when the company is already dealing with questions about its financial reporting. Investors should be very cautious and monitor upcoming filings closely. The company's ability to resolve these issues, particularly the financial reporting problems and the Lugano situation, will be key to its future performance. Alright, that is our breakdown of this Compass Diversified Holdings filing. What is your take on these developments and what they signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate filings. Don't forget to check out the Discord community link in the description for further discussion. Thanks for watching, and we'll see you next time on Corporate Decoder.